let's say we buy Bitcoin, right? We can then swap Bitcoin to USDT and then swap USDT to Ethereum and from Ethereum back to Bitcoin, right? So we're taking advantage of the price inconsistencies within the three pairs, right? And then we profit in it, right? We also have the statistical arbitrage. This has to do with, them using machine learning to identify, mean reverting correlations, right? I think this is, the most boring of all the strategies, honestly, right? This is the decentralized exchange arbitrage. It's very similar to the cross exchange arbitrage, but this happens on the decentralized exchanges, right? So it's not the centralized exchanges like the Binance, Coinbase, and all of that, right? This has to do with decentralized exchanges like Uniswap, SushiSwap, Balancer, liquidity pools, all of that, right? Very quickly, I'm going to talk about, the flash loan arbitrage. This is a very interesting one. What happens here is, we use, for example, right, when someone signs into the company, let's say a user, starts with, let's say, $1,000, right? The company can then take a loan against that, initial $1,000, right? Let's say the company takes a loan for $10,000, okay? And with this $10,000, we can then go on to trade using the decentralized arbitrage or the triangular or the cross exchange or any of these arbitrage strategies. But the difference is we are now trading with $10,000, 10 times more capital as with the $1,000, right? Now, what that means is we make more profits, right? So this is just to sum it up with flash loan arbitrage. We engage firms like Aave, right? This is a crypto, this are crypto, loan firms and all of that, right? So we get this, we do the trades, pay off the loan, and then we're left with a higher profit margin. We also have another strategy called the futures arbitrage strategy or the futures, derivatives arbitrage, right? This has to do with the funding rates, when, crypto traders make trades, whether it's a long or short position, right? There's something called the funding rate, right? And then we exploit all of that